The markets this week are telling a really fascinating story. It's kind of like a high-stakes mystery. And the big question is one every single investor is asking right now. When things get this chaotic, where does the money actually go to hide? So let's follow the trail.
So here's the puzzle we're going to solve together. We've got geopolitical tension that's just been cracked up to 11. We have oil prices going through the roof, and the market's own fear gauge is flashing bright red. Now, in this kind of environment, you'd expect a pretty simple flight to safety. But what if I told you something a little different is happening this time?
Okay, let's start with our very first clue. This number, $103.14. That's the price for a barrel of Brent crude oil, and it's hovering right near its highest level since 2022. Now, this isn't just some random market move. It is a direct result of escalating conflict, and it's sending a shockwave through the entire global economy. But a high oil price, that's only half the story. And here's the other half, 26.49. This number is the VIX, and people on Wall Street call it the fear index. When this number gets high, it means investors are seriously anxious. They're buying up protection because they think the market might drop, and right now it is signaling some major jitters. So we've got high oil, and we've got high fear. But what's causing it? Well, this is the source of all that anxiety, a military conflict now in its 17th day, and it's all centered on one of the most critical oil shipping choke points on the entire planet, the Strait of Hormuz. So, with oil and fear as our main clues, let's look at the first, most obvious place the money decided to run. So, where did the money go first? Well, it went to the most obvious place. This is the classic, you could read it in a textbook reaction. When fear goes up, investors get defensive. And you can see that move plain as day right here. Over on the left, you've got the tech-heavy NASDAQ, and it's down almost a full percent. But on the right, the Dow Jones, which is full of more stable, industrial-type companies, it's barely down at all. This is what we call a risk-off rotation. Money literally flees from high-growth tech and tries to find shelter in safer, more boring businesses. Yeah, this quote from some market analysis just sums it up perfectly. It confirms exactly what we just saw. So, case closed, right? The money is just hiding in defensive stocks. Well, not quite. This is where our story takes a really interesting twist. Because there's this one asset class that is completely breaking from the script. An asset that, if you look at history, should be falling right alongside those tech stocks in this kind of risk-off environment. But it's not.
Just look at this. While stocks are selling off, exactly like you'd expect them to, Bitcoin has been surprisingly resilient. Instead of behaving like another high-risk tech stock, it's actually starting to decouple. And analysts at big firms like Standard Chartered and Bitwise are noticing that some serious institutional money is treating it differently this time around, which, it begs the question.
Why the sudden change in character? I mean, why is an asset that is famous for its volatility all of a sudden showing signs of being a safe harbor in a geopolitical storm? What gives?
And here's the answer. In the very specific context of this conflict, which involves things like sanctions and the potential for financial restrictions, Bitcoin's unique properties are really starting to shine through. Think about it. It can't be sanctioned by one country against another. It can't be easily seized by a government, and you can't block it at a border. It is, just by its nature, censorship-resistant. And that is what's attracting a whole different kind of capital. Okay, so now we have all the clues. We've got the rising fear, we've got the tech rotation, and we have this crypto twist. So let's put it all together and finally solve the mystery of where the money is really hiding. Let's just walk through the flow, step by step. First, you get the geopolitical shock. That sends fear and oil prices soaring. The immediate reaction, people sell what's riskiest, high-growth tech stocks. That capital then rotates into safer, more defensive stocks. But, and this is the brand new part, a portion of that capital is now also moving into Bitcoin, not as a risky gamble, but as a risk-off geopolitical hedge.
So why is this so important? I mean, why does this week matter so much? Because what just happened isn't just some one-off event. It potentially gives us a totally new framework for understanding how money might behave in crises in the future.
This right here is the key concept to take away, the geopolitical hedge. For a really long time, that list of assets was super short. Gold, the US dollar, maybe the Swiss franc. What this week suggests is that, for some investors, Bitcoin is now auditioning for a role on that very exclusive list. Now, it is absolutely crucial we don't get carried away here. The bigger picture still matters, a lot. And here's why. If oil stays this high, it's just going to fuel inflation. And higher inflation could force the Federal Reserve to delay interest rate cuts.
and that in turn would strengthen the US dollar. And a strong dollar, historically, is a headwind for almost every other asset out there, including crypto. The macro environment is still the boss.
And that leaves us with a really fascinating final question to chew on. We've just seen how a slice of the market is treating Bitcoin during a military crisis. But what happens during the next crisis that's purely financial? A banking scare, a debt crisis. Is it going to behave the same way, or will it go back to being just another risky asset? That, my friends, remains the big unanswered question.